If you're looking for professional day trading education and high-level trade analysis and dissection, you've come to the right place. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to give you exactly that. Professional day trading education, all here for free on YouTube and on X. And today we're going to be going over a couple of trades, more than a couple, but on two stocks or ETFs, one on SPY, one on Qs. And I'm going to show you about opportunity, and I'm going to show you about this strategy. I'm going to go over the trade plans, the P&L, entries, exits, all of that fun stuff. So I hope you all had a wonderful day. Give me one quick sec. I'm going to fire up these charts for you folks. Let's do this. Okay, so now that we are into the charts, let's go over SPY first. Now, SPY was not the first trade sorry, I got to move over here. SPY was not the first trade that I took or we took today, but it was a very clear-cut, perfect opportunity. I'm going to zoom in a little bit for you guys so then you guys can see. Very traditional trick trades type of trade. We have speed and distance coming into a valid support or resistance level. As it comes flying in, we execute on the first push up into what I call natural. We pay ourselves, and that's exactly what happened here. So locked in. $875 on that. Very small trade, just in and out. That was it. I've already executed a beautiful trade, and I've taken quite a few trades on this next one, which you'll see. So on Qs, you're going to see a bunch of entries and a bunch of exits, bunch of entries, bunch of exits, bunch of entries, bunch of exits, and then finally my final exit on the squeeze up. Now, you're going to see normally, for those of you that are just joining us here, these blue levels are placed prior to the market open. Now, generally, you're never going to see a million levels like this. And I know there's only 3, but I consider that a lot. What we were doing today was having a very specific trade, okay, for my members to work on adding and averaging into a trade going long by buying calls, okay? It was very straightforward. First level. So I'm going to, one sec. I'm going to squeeze this up a little bit just so then you guys can really see. So the trade plan was to go long into this first level. So it actually opens up, pops, and gives an absolutely fantastic entry. Could have taken that. Same with on SPY. Missed the short, happened very fast. But we wanted this long to work on a very specific trade. Now, at this first level, we're going to use 1/4 size of a starter position. So whatever your starting position is, right? Because you're not going all in with your full amount. And if you are, you need to learn about adding and averaging, or else you're going to be fucked in this game. So we want to use 1/4. And then as we progress down, we're going to start adding in more size to correct that average. And the reason why you want to start learning this as a new trader, even if you're trading out of a small account, is to get you prepared for when you're trading large positions, because you will need to start adding and averaging in. And for the most part, maybe that isn't so true. Like, there is really no amount of volume that I wouldn't be able to market in with on options. These options on SPY and Qs are the most liquid, some of the most liquid vehicles on the planet. They're extremely liquid. You could literally mark it in with 1,000 contracts, and you're not going to get any slippage, guys. Okay, like slippage, that whole thing with slippage and using limit orders, that's for bullshit penny stocks. That's what that is. So when it comes to this, we're going to start in with 1/4 size position right here. As it comes down into these levels, we will add more. Okay, then we would use a half size. Okay, so then we would be at 75%, a starter position. And then as we come in here, there's opportunity to work this trade multiple times, which you'll see here. But all the way down, there's so much opportunity in this. So as soon as I'm going to clean this up. One sec. So as it comes into this level, it does nothing. It doesn't bounce. It does take a real quick bounce, and I know members were able to pay themselves on that. I didn't, because I'm working a bigger, broader plan. So I allowed it to come down further and entered here with more size. You can see a bunch of entries going off. And then once it pops up, I'm just stripping all that size off. It's very typical Technical Analysis 101. And let me explain. When we are above support, you go long into support. If support breaks, it will then test as resistance. And I know a lot of people repeat that, but it's almost like they don't believe it because there's so much money there. It's fucking ridiculous. It's absolutely the easiest way to make consistent money in the stock market. Now, obviously, there's a few extra little nuances and things that you have to know about, but for the most part, it is simple technical analysis 101. That's all I do. I just keep it simple, but that's why I've been doing this for over a decade. So comes up, pay myself, comes back down into the next level, enter, really start working that trade, comes up again, I pay myself, and so on. So what I was looking for here, and on here, once it started breaking down, I'm just looking for opportunity. And right at lows, this last entry, and I said that they would do this before it happened. I said, they will most likely do is crack it below and then scoop it right back up. And that's exactly what they did. They do this shit all the time, guys. It's not magic. It's not a crystal ball. It's not any of that. So comes back up, pay myself there, and just hold. So now I'm holding, I believe I only had 10 or 7 contracts. I didn't have a lot. It wasn't a lot. So I paid myself, oops, one sec. I paid myself as it started squeezing up here. Beautiful sell right at highs, and then just got the fuck out. And that was it. Oh, no, I don't think that was there. I think that was later on, wasn't it? Yeah, that was at 1 o'clock. Yeah, it was into the squeeze. That's right. Yeah, into the squeeze here. And I just happened to come back into the office for a few minutes. And I looked and I'm like, it started squeezing in here. So I was just patient, let it squeeze. I took care of what I needed to take care of. And then I simply paid myself. So locking in just under $29,000 on that trade, working it multiple times, taking incremental trades, as I like to call it. Nothing stressful, nothing difficult. This is how I do it each and every day, guys. So if you want to learn how to come do this professionally and stop spinning your wheels, come to tricktrades.com. Work with a proven professional that's been doing this over a decade. And if not, no worries. Continue watching my free stuff. Just remember, it's just going to take you a whole hell of a lot longer, no matter whose free stuff you're watching. It's free for a reason, right? Because details are missing, and that's just how it is. You have to understand that no day trader worth his weight that went through absolute hell and sacrificed everything to get to where he or she is would ever, if they are legitimate, they just wouldn't. They would not be giving away 100% of their knowledge for free. They won't do it. Of course not. But on this channel, there is a lot of great information. There is 1,000 free video lessons that can absolutely get you going, but you're going to have to piece them together, and that's the hard part. Or simply sign up for tricktrades.com. Adios, folks. See you tomorrow.